What's going on, guys? Eric here at Traveling Trading. So, look, we're going to go ahead and review these trades that I did for the week, just to kind of give you some insight. I know a lot of you guys were asking questions about all the trades I took this week. It was well over a $10,000 week this week. So, I want to break down some of the ins and outs of my trades for you, give you some insight, hopefully, be able to help you out with your trading. I'll go over some of these questions that a lot of you guys asked in the chat room throughout the week. Sorry, it's been a while since I've been able to put out videos, just been very busy with other stuff aside from trading. So I wanted to take some time and just kind of, do this here with you guys so this can give you a little bit of refresher um, and, hopefully continue to have great weeks. Of course, while, the markets are bleeding out day in and day out and everyone's crying about recessions and stuff like that, we're still staying green. Okay. Mostly because of the alerts for me, but, hopefully everyone is, doing their trades the best they can. So let's go ahead and jump into these, and I'll start asking answering some questions at the end, and you guys can, take a look at the results and all that good stuff later on. So all the trades that I'm going to go over here today are also posted in the Facebook group. If you're not in the Facebook group, go ahead and join it. It's free. The links are all over the place, website, all that good stuff. We're just there to, talk about stocks and everything like that. Throughout the daily basis for you guys to ask questions and all that other good stuff. I post all my trades in there. You guys who know me, been following me for these last few years. I only do like one or two trades a day. No, preferably no more than three, especially three at a time. But yeah, I try to keep it simple, execute my trades day in and day out, and stay green. So do my best to try to show you guys what I do. All right. So let's take a look here at. We're gonna work our way backwards. We're gonna start from Friday and go all the way back to Monday this week. Of course, ARC has been like the king this week. Um, but we also had some other good trades and some really other good alerts as well too that you guys banked on. So congrats to you guys that did that. So we're gonna start from Friday and work our way back to Monday, just so you guys can kind of get a good look at everything. Okay. It actually ended good and started good this week, so that's a good thing. But let's jump into the first trade here with COGT. Let's take a look at that bad boy here. It was on Friday. All right, so COGT, we got the first alert at about 6:35, 9:35 a.m. Eastern time. Basically, it was already up. Oh, actually, we got a little bit earlier than that. Got it at first one we got here was at 6:26. All right, which is 9:26. So right before the opening bell, we got that alert, and then it just continued to run up and run up and run up all day. All right, let's take a look at the chart. Now I got in this bad boy here at 7:01, mostly because of the alerts. But um, now, just to kind of piggyback off of like one of the first questions that a lot of you guys asked me as far as how am I picking and choosing which alerts to trade. Me personally, I'm just looking for either a good entry or a good pattern after it's already been alerted and made a move and formed a pattern that I'm looking for. Now, obviously, sometimes there's certain stocks running at the same time. If you guys look back at the other video, or if you're in the trading group, I posted a video for you guys to show you how to have multiple screens or multiple charts in one screen so you can look at all of them at the same time. Now, granted, I have a two-screen system here, but you can always jump in and out of stocks just to look and see where they're at the point, they're being alerted to see if this might be of interest for you to enter or not. That's up to you based on what you trade, okay? But that's pretty much how I do it. So like I'll have nine different screens on my Thinkorswim, and then as an alerts are coming through, I'll type in that stock and look at it, wait for the formation to show whether I want to see a cup and handle, ascending triangle, et cetera, et cetera. Or I might, be in a good entry where I think the catalyst is good and I got in, at a decent time and I'm waiting for the stock to play out. Kind of like how I did with this one. Okay. So let's take a look here. COGT. Again, I got in at 701 right along this candlestick. The reason why I entered here was because obviously a couple minutes before when it was alerted, it looked good, and it held up. This is during pre-market. I waited till after the bell to see if it's going to potentially make some moves. Then it had this big green candle right here. So I said, okay, this is my time. It's fluctuating from here to here throughout this candle. So I got in at 701, which was great. Good entry, right? So after my entry came through, pretty much, I know that I'm at a good level of support. All right. I know I'm going to use this as my next level of support. So if it happens to run down to 550, then I'm going to exit. Okay. And I'm okay with taking that loss. So a lot of you guys were asking me this question here about letting the winners win and missing out on big gains because you're getting out too early and stuff like that. You guys got to understand when you're doing that, it's a few things that are happening to why you're doing that. One, if you are into a trade and you're looking to gain 15 cents to a dollar, 30 cents to a dollar, et cetera, and you execute that trade and that happens and you get out and the trade continues to run, guys, you did exactly what you were supposed to do. You didn't miss out on the big gainer. You didn't miss out on any. You did exactly what you were supposed to do in your trade. Okay. Just because the stock happens to run some more doesn't mean anything. Okay. Understand that's a win. That's not a loss. All right. Missing out on big gainers is not a loss, especially if you nailed your trade the way you were supposed to. Okay. Now, when it comes to risk management, and let's say if you got into the trade but got out earlier than what you're supposed to, then the stock began to run. When I say getting out earlier than you're supposed to, meaning it was in your plan. You were supposed to wait until the stock reached a certain point and reached another point for you to exit, and it hit neither one of those, but you got out earlier because you were afraid. This is basically just emotion and bad risk management. Okay, you're not giving your stock enough time to run, and you're not giving it enough leeway to be able to fit that trade plan. Okay, it's either one or the other, or it's both. Sometimes that happens with a lot of new traders, especially, and you're wondering why you're missing out on big trades. It's because you didn't let the stock run. It wasn't in your plan, or you didn't let the stock run, and you got scared because you're getting greedy and you want to just take your profits and lock them in. Okay, so for me to avoid missing out on big runners, some of the few things I do typically is four main things, and it was easily identifiable here, especially with COGT if you were probably following these little simple rules. One, of course, is that I'm making sure I'm in a good entry. Okay, if the stock is not giving me confirmation that it's going against me, and here you see where I entered in at $7.01, it never came back down to $7.01, did it? No, it didn't. Okay. Now, when I got in at $7.01, honestly, my goal was to get it to $8 and leave it there. And even back here, I didn't get psyched out for one good reason because of the fact that I'm still in the green at this point. I know many traders looked at this point and, for those who got in at like this point, especially like the scalpers, they got in and they seen this candle coming up, afraid of the reversal because the market is bearish. Usually they would want to get in. They would want to get out at this point because it's turning against them. Again, I wanted to get in to $8, and normally I should have got out at that point. However, look at this. I'm above the volume weighted average price. Okay. So that already still giving me an indication that this is still bullish and it has time to run. If I'm already up almost 90 cents to my dollar, I don't need to get out. I still have time to weather that storm. Okay. Now I might move my stop loss to maybe like, to like 750 area. That's fine, even though it went all the way up there. I'm still green for my entry point. So I'm okay with letting it run until it would have broke that. Then I might have said, okay, now it's time to take my gains. But that never happened. Okay. You got to have that risk management in your plan before you enter your trade. Okay. And again, I'm on the 1 minute. You got to have another time frame of confirmation, guys. Like for me, on the 1 minute, I'm also looking at the 5 minute. If you trade on the 5 minute, you might want to have 15 minute. If you trade on the 15 minute, you might want to have the third minute. You got to have that as confirmation, because if I stick to just following the 1 minute chart like I am here, and I don't have a 5 minute chart, then I'm gonna get psyched out. If you guys see, a lot of times when I'm posting my trade results, you'll see one chart at the top, one chart at the bottom. My 1 minute chart is at the top, my 5 minute chart is at the bottom. I'm using that as a confirmation to whether I need to get in or get out of a trade, knowing if the trade is going against me or if it's just getting its correction and price action, and letting things happen. That's usually what it is. Okay. So again, I don't know what time frame you guys are trading on, etc. But those are typically common outliers when it comes to people getting out of trades early. They're misreading a lot of things. So one thing, again, have your extra time frame, know where your support and resistance is at, using that in your risk management, okay? And then another thing as well too is watching level two. If you guys want to know why I was able to get out almost near the top, is because if you looked at COGT, it was giving you ample times to get in the trade and get out of the trade. And also it was basically telling on itself, especially with level two action. There were so many sell orders piling up at this $11 mark that I knew that it was pretty tough to get out of that and going to be able to go anywhere further. And that's when I took my money and ran. Okay, because there was plenty of times where it got to like key levels of whole and half dollar marks where traders are usually entering and exiting, where it was saying, hey, it's still bullish. Like for example, in the $9 area, there was resistance there, but if you would have been watching the trade, and especially as it was turning back down and support was still staying there, the resistance level was still there, but it quickly got broken and it continued to rise and rise and rise. That's something that's going to come with time and experience, guys, watching that level too. So as I'm in this trade, and it's breaking the $8 level, pulling back, rising up, rising up, rising up. At the $9 level, still orders started to pile up again, and it came to push it down. But support came because buyers were looking at that being as a good opportunity to buy in. And guess what? You know it's going to curl up. So as it starts to curl up, it just pops on up. You guys should know this from your indicators and isolators or whatever else you might be using. But obviously, at this point, there was way too many sell orders coming in. I said, I'm not going to push my luck. It's a Friday. I'm going to take my profits and go. But even then, let's say if I, wanted to test the waters and the trade started to go against me, you can tell the exponential moving average is, the price action is below the exponential moving average here. So it's starting to cool off. Then it begins to break the volume weighted average price. That's pure bearish signs. Then at that point, you can go ahead and exit. Now look at that. Even if I did follow that rule, which I didn't, but if I wanted to, I'm still up a good $1.50 off of my $7 in one entry because this point here is at like $9. It's almost at $9. Okay, so that's pretty much my COG trade. Got in at 701, let it ride up. Didn't get spooked out by none of these dips. In fact, you should know this right here, this trading pattern. You should be able to know this. This was a good sign to enter. This was a good sign to enter, and this was a good sign to enter. For example, why was this one a good sign to enter? I'm gonna let you look at that real quick. Look at that chart, look at that price action. Why would this be a good sign to enter? Easy, because you got a bearish candlestick on top of bullish isolators. This still has room to go. This was just telling you to buy at a discount. This was telling you to buy it at a discount. Yeah, the price was trying to be pushed down. However, you got isolators and averages telling you that this thing still has ability to go up. Then you had more pullback right here. When you had this pullback, on the red end of the moving average convergence divergence, which I tell you guys all the time, even if you do let it run up, wait for a pullback and enter in and manage your risk to reward accordingly. It never pushed down. It never came down anymore. You could have entered in, and gotten in that run up. More of the times to get in. You could have let this candlestick pattern here show you, oh, go ahead and get in. I mean, it was just so many opportunities for you guys to enter in that trade. So hopefully, I mean, I've seen a lot of you guys in the chat room were banking on it. Congrats. Those of you who may have missed it, hopefully you learned something from this. Okay. But that's the OGT. That's that trade. That's how it went. Executed perfectly on the Friday. For me, hit the nail on the head. I pretty much nailed the meter to move on this one. Not gonna lie, I don't want to toot my own horn, but from 701 all the way up to 1080, that's pretty much the bulk of the move. Couldn't have got no better than that, honestly. You're never gonna nail tops and you're never gonna nail bottoms. That's just how it is, guys. Sorry. But let's move on to the next trade. Let's go to Thursday's trade, which was PBTS. I'm not going to break down why I'm choosing the trades I'm choosing. You guys should know what I look at in the stats. Obviously, I'm going to use an alert as a catalyst, and that's going to be, the main thing there. Um, but this is just to kind of review some things with you guys. So PBTS, you see, we had all these other alerts come in, SONN, um, you know, BJDX had good news, different news. AUVI was a pretty good one. I know a lot of you guys banked on that, but I decided not to get in that one. It was still a perfect opportunity. AREC was going all week, so that was good. Then finally, PBTS hit a new high day. Let me go back to it here. We don't need to look at the stat. You can look at the stats later. You guys know what I look for in my stats. I typically want to see things that are 60 million or below in volume. So that's, what I look for. We are looking at today's Saturday, the 9th. Yeah, so pretty much this right here. I got in this one at 117, $1.17. So let me show you guys something. I didn't even get the meter to move here, but I still had a decent gain. It was like a 22% gain. The stock rose up, right? And then it began to lighting up right here. It begins to flatten out. This one here, I was just doing the ride the wave strategy, because of the fact of where I entered in at, still kind of green. And I knew it was going to pretty much, jump to another level, which a key level, what I tell you guys look for, whole and half dollar marks as well too, around the 150 area. You could have easily seen on level two that a dollar and 50 was having a lot of sell orders. Okay. So since I got in right here at 117, okay, I let it grind out, grind out, grind out. Had a little bit of a pop. I had my support mentally set here for like a dollar level because it was a lot of green there. So think about this, guys. I wanted to get in at 115, but got in at 117. Wanted to ride it to 150. My support was going to be at $1. That's a good risk to reward ratio. Okay. Anything above 25 cents out, a dollar and 25, I wouldn't have got in. It probably wouldn't have been enough for me. That's like a 50-50 chance. But I got in at 117 and I was able to see all the way down to the ladder that there was resistance at 150. So I waited, until it showed signs of going there. And it pretty much did. I got out like 140, like 148 or something like that. I got out like right in that green candle, sold into the strength, and then everything began to turn and come down. Wasn't a big gain, only about 230 something dollars. Wasn't a big gain, but 20% move because I had a lot of, shares into it. So I'm not going to complain there. All right. And that's PBTS. Like I said, there was better trades to take that day, but I went in this trade with a plan, stuck it out. I knew when to, go ahead and get out, and I did. Okay. Don't be too greedy. Let's look at the next trade. That was on Wednesday. HTCR, June 8th. Here we go. And guys, remember, I'll post it at the end of this video, but all my trades are posted in the Facebook group for you guys to go look at. Okay. When I have time. Sorry, I've been so busy. So HTCR, their catalyst, we got the alert. First one here, 5:30 a.m., which is 8:30 Eastern time, that they were authorizing 3.5 million shares to be repurchased. That is a good sign for a company when they're repurchasing shares because that means the company is doing good financially. Okay, so you should know that. So here we are, June 8th. Let's go back to the 5:30 time frame. It's pretty much when that happened. So there's your moves. And I'm on a 5 minute chart. I just realized that. Let me change this to 1 minute because that's what I trade on. Here we go. June 8th. All right, we got that alert at 5:30, which is this time right here, guys, early in the morning. Okay. Hey, look at HTCR. So obviously during the pre-market, not doing much move, but caught my eye. It was on there because it was news. It was on my radar, on my charts, on my screens. And then it broke new high. That was intriguing. I didn't get into this trade until about $2.51, I think it was. So I didn't get into this trade till like way up here, guys. Okay. I only got like a 26% move. I didn't get much. I got in like right here. This was way after the bell. So it's not just about being early in the trades and the alerts. I mean, yeah, I missed out on a lot, but there was still strength coming from there. And I was able to see that with level two. So obviously here, get in at 250, goes up all the way up to almost $3. It's giving me a sign here that there's resistance. I'm like, okay, that's fine. Pulls back down. It never got below my initial entry. Remember, 250. Well, it did a little bit, but not much. Okay, it is still bullish to me because of it being over the volume weighted average price. Only thing that was kind of concerning is that the exponential moving averages was showing that it might be cooling off a little bit. But you got to remember, you're at the downside of the moving average convergence divergence. So that might just be momentum pulling the price action back down to where it needs to be with buyers and sellers. Okay, but we're still bullish overall. In at 250, stopped out at $3, pulls back down, goes back up, shoots up to like right. I think I got out at like 312. It broke $3, didn't show much strength, and I just pulled out. That was pretty much it. So I really just kind of played the top right here at this point. Price action will tell you a lot, guys. Level two is very, very important. Okay. And as you can see, got out with my gains, and then this thing just kind of trickled down. If it wasn't going to break 315, there's no point in me staying in it. A lot of you guys got faked out right here. For those of you who are being greedy, of course, drop down, death candle, then it begins to bounce. And this would have been a good move here to gain two. Okay. How can you predict something like that? You can't. You typically want to wait for support to show. And this candle here is indicating strength, flipping green. That means, it's going to start slowly, gradually going back up. And PBTS ended pretty good, guys. That was a whole, I'm sorry, HTCR ended pretty good. It was a whole 114% gainer that day on Wednesday. Okay. But that was pretty much the HTCR trade. Now let's take a look at the next one, which everyone knows was the killer this week. AERC. Now this one I can't stress enough. Not only did I tell you, this one was Monday and Tuesday play. Okay. Now I told you guys Monday after it went berserk to look at it again the next day. It was in the watch list. As a matter of fact, I did a whole like TikTok video on this and everything. And the day before, like you had ample time. If you didn't bank on any trade this week, this one should have been the one you banked on. Okay. So this is Tuesday. AERC. I'm sorry, I don't know if it's in the frame, but beautiful grind today off the news, catalyst. Blah, blah, blah. Congrats to all of you who profited on AERC alert. And then just gave you some more news about it. It has strong after hours too. We'll be looking for signs of continuation on or the 2-day trade on that one. Okay, told you guys that morning because previously the day before, and we're gonna look at those trades too. That morning we got alerted. Aside from the swing alerts, those were, you know, one of them wasn't good. FSR, but I'm holding on that one long term. But anyways, ARC went berserk first day. We got alerted right here. Okay, 6:54 a.m. 9:54. This was on June 6th. Let's pull it up. Let's look at the chart. Yeah, look at all that. Thing went berserk. All right, let's see where we're at. June 6th. This was it. Back when it was like $2 and 90 something cents. Guys, I don't even think I really need to go over this. I mean, you seen Tuesday. I profited off of this one. This is my only, like, I did a bad trade on RDBX, Redbox, and then I did okay with Jan, made like $385 there. And then AREC was a $5,000 trade, 87% move. That was Tuesday. Because look what it did the next day. Look at that. So this is the day that we want to look at, June 7th. I got in at $11.59. Then I'll go back and show you guys what I did Monday. But anyways, got in at $11.59. I'm sorry, I didn't get in at that, but that was my last price um, listed there. But this thing just ran crazy because of where you entered at. Never really pulled back. Let your winners win. That's what I'm going to tell you guys. And when I say let your winners win, within these green candles, you got to remember sometimes these stocks are flipping from red to green, red to green, red to green, red to green. You're not letting your stocks play out long enough, and that's why you're getting out early. And because of that, you're not sticking to your plan, and because of that, your emotions are taking over, and because of that, you're missing out on big gains. You see how this all trickles down as a domino effect? This was an easy trade. I can't I can't really break this down just because of the fact that it's so easy. Even if you did, you get alerted, wait for the pullback, enter. Wait for the pullback, enter. Wait for the pullback, enter. You see how all that's aligning with like the moving averages and the Squeeze Pro indicator? I don't know what to tell you. Enter in on the reds. Stop trying to chase greens. If it's on green, don't get in. Wait for the reds pull back. See where the support's showing. Take your risk there. Measure your risk there. If it goes down more, are you willing to get out at this point? That's fine. If not, guess what it's got to do? It's got to go right back up. See how much the strength goes back up, and you can sell into the green. It's that simple. Okay. Um, it's no point in me going over Monday. I mean, it's really no point in me going over this trade at all, guys. That's pretty much it. All right. Wanted to make this video quick. Hopefully, you guys, enjoyed this, kind of seeing the insights of what I'm seeing when it came to these trades. But that's pretty much it. Um, I'm gonna do something special for you guys. I know a lot of you in the group chat were asking, and some of you guys were talking about. I'm gonna try to do um, an offshore broker. I'll try to use CMEG, walk you guys through it, and that way you have to worry about the PDT rule. Trade as much as you want. Also can lose as much as you want. So be careful with that. But look forward to that for you guys that are in the chat room and groups and alerts. Hopefully you had a green day. This was a good $10,000 trade week review for you. Again, the market's been red all week. Not us. We've been green. So let's keep it that way. All right. Hope you guys enjoy. If you have any questions, let me know. Take care. But remember, if you don't want to miss out on those big gainers, stick to looking for support and resistance. Be mindful of your entries and exits and your risk management. Okay. Don't be afraid to let your stock run. If the stock hasn't gone against you yet, let it go. Let it play out. It has to go. Yeah, it'll come down, but it'll also go right back up. So watch level two, guys. Look for those sell orders that are showing up in key areas of support and resistance. If you're watching the support or the resistance areas get broken or the buy orders weaken, guess what? Decide whether or not you want to enter or exit. That's just it. All right. Till next time, guys. Stay green. I'll see you next week.